Hello and welcome to Stock Value Tips. AT&T faces several notable risks today. First, the company carries high levels of debt, largely stemming from past acquisitions like DirecTV and its ongoing network investments. This creates pressure on cash flow and limits financial flexibility. Second, revenue growth is slow because the U.S. telecom market is mature and subscriber growth is limited. Third, 5G network deployment is highly capital-intensive, requiring continuous investments to stay competitive and maintain service quality. Fourth, AT&T faces intense competition and pricing pressure from Verizon, T-Mobile, and other cable and broadband providers, which can affect margins and subscriber retention. Finally, changing consumer behavior like cord cutting and streaming adoption impacts demand for traditional TV and bundled services. Despite these risks, we'll explore future opportunities in the next slide to see why AT&T might still be attractive. Despite the challenges discussed earlier, AT&T still has several meaningful opportunities ahead. One of the most important areas is 5G network expansion and wireless infrastructure, supported by recent spectrum acquisitions and ongoing investment, which can help the company capture more customers and higher-value service plans. AT&T is also leveraging growth in fiber broadband, adding subscribers and bundling wireless with high-speed internet services, creating revenue stability and convergence benefits. Another compelling feature is the dividend yield, which remains attractive compared to the broader market and many telecom peers, making the stock appealing for income-focused investors. AT&T continues to generate strong free cash flow, which supports both the dividend and potential shareholder returns through buybacks or debt reduction. Finally, AT&T is trading at a valuation discount relative to history and some peers, which could present value opportunities if growth catalysts materialize. Together, these factors suggest that despite its challenges, AT&T still offers multiple long-term opportunities for investors focused on income and value. Looking at AT&T's financial performance over the past decade, the stock has delivered a 10-year annualized return of 5.3%, including reinvested dividends, showing steady long-term growth despite industry challenges. The company trades at a P/E ratio of 7.8, which suggests a relatively attractive valuation compared to its peers. With a beta of 0.60, AT&T exhibits low volatility, making it a stable option in the telecom sector. The EV to EBITDA ratio is 6.2, and net debt to EBITDA is 2.8, indicating that the company's leverage is manageable relative to its cash flow. AT&T's ROIC over the last 12 months is 7.75%, showing that it continues to generate returns on its invested capital, while the price-to-free cash flow ratio is 8.5, reflecting a solid cash-generating capacity. Profitability metrics are strong. The net income margin is 18%, and the gross margin is 59.7%, indicating efficient operations and healthy profit levels. These figures demonstrate that AT&T maintains a solid financial foundation, offering stable margins, attractive valuation, and moderate risk for long-term investors. AT&T currently offers a dividend yield of 4.62%, supported by a payout ratio of just 36.9%, which indicates that the dividend is well covered by earnings and free cash flow. This relatively low payout ratio provides flexibility for the company to continue reducing debt, invest in its network, and maintain dividend stability even during economic slowdowns. From an investment perspective, AT&T represents a value-oriented telecom stock with stable cash flows, low volatility, and an attractive income component. While revenue growth remains modest and competition is intense, the company's focus on wireless and fiber, combined with disciplined capital allocation, supports long-term sustainability. At current valuation levels, AT&T may appeal especially to income-focused and conservative investors looking for steady returns rather than high growth. As always, this is not investment advice, but an educational analysis to help you form your own opinion. Thank you very much for watching. If you enjoyed this video, don't forget to leave a like and subscribe for more long-term stock analysis. And let me know in the comments, do you currently own AT&T stock, or are you considering it as an income investment?